Hey, what's going on YouTube? Welcome to my channel, and today we're going to talk about how to invest in real estate with little to no money down. Let's get to it. Check it out. Hey, what's going on YouTube? Welcome back to my channel. Thank you for checking out another one of my videos. My name is Railway to Success. Now today we'll be talking about one of the most popular questions asked in real estate investing. How to invest in real estate if you have little to no money down. Now, I know most people think that in order to invest in real estate, you need to have $10,000, $20,000 or up to $100,000 worth of money to make a down payment, which is true in some instances. But there are some strategies that we'll go over today where you can buy real estate with little to no money down. Okay. Now, before we get into the different strategies, let's first go over why you will want to invest in real estate. First, real estate has proven to be a profitable investment asset. From buying distressed properties or from buying multifamilies, from buying large multifamilies, real estate has been proven to be a solid and wise investment asset. Also, real estate have been known to be a little less, let's just say, volatile compared to other investment strategies, meaning stocks, crypto, or investing in a brick and mortar business. Real estate has shown to be a steady growth. You can also, from the appreciation to when you do your taxes, you can file depreciation. Real estate has shown it is a very trusted asset. Now, the first strategy we're going to go over is wholesaling. Now, I'm sure if you're into real estate investing, you probably have heard the term wholesaler or wholesaling. So, wholesaling is the strategy of finding and marketing a distressed property and placing under contract, and then selling the contract to an end buyer or another investor for a fee. So you're actually like playing the middleman role. So you're marketing to a homeowner, and then you're selling it, and you're putting the property under contract, and then selling that contract to an investor for a fee. I've done 2 or 3 wholesales in my journey. My first wholesale, I made $5,000. That's what it tends to be. The going rate in my area for a wholesale is about $5,000 to anywhere up to $10,000 to $15,000 to $20,000. Anything above that, you're cooking with fish grease, as they say. So, what properties will you market to? So, the properties you will market to for wholesaling is, if you ever seen any abandoned properties, like properties that's boarded up, properties that have tall grass, the mail is coming out of the mailbox. There's old cars and things and junk in the yard. These are the type of properties that you want to look for when it comes to wholesaling. Properties, do you know anybody that recently have a loved one pass? These are called like probates, or anyone in foreclosure or tax sale. So these are the properties you want to look for in terms for wholesaling. So what you would do is you would find a property that's in distress, or the owner is in a distressed position, and you will market them. Rather, you would give them a phone call, you can send them a text message, you can send them mail, you can find them and send them a message on social media. Any way to contact these owners, you will market to them and say, hey, my name is so-and-so. I see that you own the property of 1234 Main Street. I'm an investor. I'm looking to purchase properties in your area. Would you be interested in selling? 2 things they can say. Hey, they can say, yes, I'm interested. Give me more information, or no, don't call me again. Either way, you erase someone off the list. Either you're going to go forward in marketing or negotiating with the owner, or you move on to the next person. So once you get this property, so you go over the steps, you try to get I would definitely advise you to take a contractor with you to get an estimate on the repair costs, because what you want to do when you wholesale a property is you want to market this property, you want to put this property, I should say, under contract for at least 70 to 65% discount. So if the property is worth 100,000, you want to at least say if the property was in great condition, you want to offer 70,000. Okay, so you're going to start off offering about a 65% discount, and then you're going to subtract the that price from the construction cost. So say if the property needs $30,000 worth of work, so 70 minus 30,000, you max you want to offer for this property is $40,000. Give and take. You also want to account for different fees like closing and different things like that. From there, you want to find your end buyer. Now your end buyer is someone who buys real estate to flip or to hold for an investment. So you will want to market to an end buyer. So the thing is, to find a great end buyer, you can go to real estate meetups, or you can find, if you see someone working on a property and they say, hey, I have a property around the corner you may be interested in. I have this property under contract. Would you be interested in buying? Once you find your end buyer, you're good. You wait. You go to the closing table and you get a $5,000, $10,000, $20,000 check. Now this, and you put no money of your own into the deal at all. The max you may have put in was the marketing. So you do have to put some money down for marketing, but hey, that's the cost of doing business. Now the second strategy is called seller financing. So when you go for seller financing, what you're basically saying is, hey, that you want to buy a property, but let's just say you don't have the credit or you don't have the money to put down. So what you would do is you would go on Zillow, or you will find a property that's for sale by owner. Once you find this property, you would go to the owner and say, hey, I can't buy this property for the traditional way, which is getting a loan from a bank and closing. So what you want to do, especially you want to find an owner who's having a hard time selling their property. So my general go-to is someone who's had their property on the market for 100 to 150 days or more. The property is just sitting, they're not able to find a buyer for some reason. Maybe their price is too high. Maybe their property needs some work, and for the number they want for it, they can't get. And so what you would do is you would go to this owner and say, hey, I'll be willing to buy this property from you if you would be willing to carry the note or carry the mortgage, meaning that the owner operates as the lender. So generally the property have to be free and clear, meaning the mortgage is paid off. The owner owns this property without a mortgage. So in this case, you would negotiate terms with the owner directly. You say, hey, I would be able to put 10% down, 15% down, 5% down. I like an interest rate of 6%. Would you be willing to, let me make my payments directly to you to go off to paying off the mortgage? Now, typically owners don't want to do this, which is why you need to have properties that's sitting on the market. They're desperate to sell. So you would generally, and also owners do not want to carry a 30-year term, especially if they're older. They'll never see that money. Okay, so you would say, hey, I will be willing to pay you off in so and so amount of time. So this can give you, if your credit is messed up, this can give you time to fix your credit. Or if you need extra money, this will give you time to save up some cash or build up a cash fund to purchase the property. So seller financing is an excellent strategy with little to no money down. Now the third strategy is quite similar to the second strategy, which is seller financing. The third strategy is called lease options. Now, a lease option is when you don't have the money to buy the property from a seller outright. So what you would do is you would sign a lease agreement with this owner. Now, with the lease agreement, what you're doing is, if you ever heard of rent to own, especially quite similar to that. So you sign a lease with the property owner, and you actually can do what you would like with that, or not do what you would like. But you can use different strategies. So I know it's popular to sign a lease agreement with an owner and placing a property on Airbnb or travel nurses website. So what you're doing when you sign a lease option is you're gaining control of the property without actually owning it. So again, you sign a lease with the owner, and you control that property for a certain amount of time. And generally the owner will give you a certain time period to give you the option to purchase the property outright. So if you don't have money at, say, day one to buy the property, but the property owner may give you, hey, I may give you a 3-year lease agreement, and after the 3rd year, you can either purchase the property, or you can either renew the lease, or the owner can take back control of the property. So this is generally well liked more so by owners, because they get the steady stream of rental income, while also having a direct buyer for their property in case the renter wants to go through with buying the property. So third option is called lease option. Now the fourth strategy is a term called house hacking. So in terms of house hacking, what you would do is, now the fourth strategy is called house hacking. So if I was to say house hacking, basically means you're buying either a multi-family property or a single-family property, and just say, hey, it's you and someone, one of your significant other, or you're single, but you want to buy a property, but you don't want to pay the mortgage. I know a lot of people I don't want to pay my mortgage anymore. So what you would do is you would say, hey, either you have a friend or a family member, or you can advertise another unit. Say if you have a duplex or a triplex, or if you have a single family home but you have unused bedrooms in it. You can do is have a tenant sign a lease, and you collect rent payments. Those rent payments, they typically pay either the whole or significant portion of your mortgage. So basically, you're living for free in your house, or you're living there at a significant discount. These are real popular. So this is a real popular strategy. So exactly, if I say you have a duplex, triplex, a quadplex, meaning a home with multiple apartments in it. So this is popular. So these are quite more popular in Midwestern towns. But these are excellent choice for investing, and it's a very, very smart investment choice if you're a first-time home buyer. And if you're young, you're single, you want to be a homeowner, but you don't want to pay your mortgage, and you don't have a family, so you don't really want to get into a single family. Or if you do have a single family, but you don't want to pay the whole mortgage, and you have rooms that you can rent out. So that is an excellent choice, for a first-time home buyer with little to no money down. And also, the great thing about if you're buying a 1 to 4 unit building is you can use first-time home buyers program, or you can use a home buyers program like Fannie Mae, or you can get an FHA loan. Anything with 5 or more units, it's considered a commercial property, but 4 or less is considered a home. I can't think of the term, but so these are great ways to invest with little to no money down.